Hello, I'm Peter Towers, Managing Director of Towers Business Development. Thank you for joining us today for this updated commentary on financial matters affecting SME businesses. Today's theme is preparing business plans for your business. We started this theme last week where we commented on various aspects of business plans. We are presenting a free webinar on Friday the 24th of September, commencing at 2 p.m. AEST, to review all aspects of the preparation of business plans for companies, charities, not-for-profits, or partnerships. Because planning is very important no matter what type of business entity you are operating within. The first item I want to talk to you about is communications. Within the business plan, the strategy for ongoing communications within the business should be clearly stated. It might be the daily huddle, the weekly team meeting, the monthly business review meeting, the monthly board of directors meeting. It's all very important that it is appropriately documented within the business plan. Succession is an important issue within a business, and I hope that you would be able to discuss this and ensure that succession is clearly documented within the business plan so that it can be seen to apply to not only the managing director or another key executive, but to every person in the organisation, because succession, as I see it, is appropriate training of people to replace others within the organisation, to save the organisation having to continually go to the marketplace to recruit people. The board of directors and board of advice is an important consideration in the business plan, especially the adoption of corporate governance has been the key guiding principle for board of directors meetings, and in fact it should be the guiding principle for all communications within the overall business. Scaling up. Many companies are now looking at scaling up as a business process. They currently might have a turnover of $1 million and they'd like to get to 3 million in a couple of years' time. Or they might currently be on 3 or 4 million and they'd like to go to 7 or 8 million in a few years' time. How do they do it? How do they fund it? How do they gear up? And the gearing up process is the leadership team. Are they appropriately trained? Are they motivated? Are they raring to go? What's been done with the other team members? Is there appropriate staff training? Is there motivation? Can they see career prospects that will make them keener? Have the strategies of the business been clearly established? That's going to take a lot of work in people sitting down and considering items, having some debates and coming up with strategies. But then the most important function of all is the implementation of those strategies. You can draw them up, but making sure they work is very important, and the directors need to be kept informed about this process. Capital is an important consideration if a company is trying to scale up, because the scaling up process requires money, because you invariably find that the business needs more stock. It has larger debtors balances. It may have undertaken new capital works, a new factory, a new office, a new building somewhere. Or there may have been a significant investment in intellectual property because a research and development project's been undertaken. The key question is, where is the funding going to come from? And that should be planned long beforehand. So there's plenty the directors can do in conjunction with the leadership team. We're also going to look at quality assurance, making sure that's been properly attended to within the company. The liquidity reports that should be presented to each board of directors meeting, whereby the chief financial officer or the virtual chief financial officer, that's the part-time CFO, submits a report identifying the key payments that have been made, or probably more importantly, identifying which ones have not been made. And together with similar reports on the debtors and on the company's responsibility to pay creditors. The other big issue is predictive accounting, looking at budgets and cash flow forecasts and projected balance sheets, so that what's reflected in the business plan is able to be created as a financial picture of what the company or business or charity or sporting body is going to look like according to the business plan financially in 3 to 4 years' time, whenever the plan goes to. So there's a lot of good, exciting work that can emerge from the preparation of a business plan. I look forward to talking to you about this on Friday, the 24th of September at 2 p.m. AEST. Please join us. I don't think you will be disappointed. You will hear some information that you can implement in your business. Stay safe and have a great day. Goodbye.